DeRosa Insiders community. It's Matt Faircloth, and welcome to DeRosa Insiders Live. If you guys follow DeRosa at all, you probably are going to guess that my very special guest for today is my brother from another mother, our market hunter, my business partner. A lot of things to DeRosa. The third leg of the DeRosa tricycle, and that is my partner, my man, Hervé Francois. How are you today, buddy?
Hey, Matt, how's it going, man? Always great to be here. Great to see you. Third leg, huh? Third leg? Okay, thought it was second, but
The ties, you can be the second. That's fine. Just
okay.
gonna be a third leg.
Yeah, I mean,
Yeah.
So we got San Antonio, Texas in the right corner. We got New Braunfels, Texas in the left corner, right? So just a comparison of these two cities, which New Braunfels is literally 40 minutes northeast of San Antonio. It's actually nicely placed between San Antonio on the west and Austin, Texas on the east, right? And you see the breakdown here, right? A typical primary versus a typical secondary market. Again, not knocking San Antonio. I hear beautiful things, never been. I hear beautiful things, have great economy, and so on and so forth. But population 1.5 million in San Antonio versus the population in New Braunfels, just about 117,000. But look at the population growth rate over the past 4 years and over the next 5 years for both cities, right? Just a little more than 5% population growth, which is really solid for San Antonio over the last 4 years. But look at that population growth in New Braunfels, 28%. And expecting another 27% looking out through 2029, right? Whereas San Antonio, 5.6%. Now you can say, hey, listen, all right, this is all right, the law of big numbers and everything else. Sure, the law of big numbers, but 28% growth over the past 4 years, 27% growth over the next 5 years is pretty incredible. Very, very healthy. So I know when I'm looking at properties in New Braunfels, I don't have to worry about finding residents for my properties. Right? Yeah, I've got people moving in from all over the place. I wouldn't be surprised if a lot of people moving into New Braunfels is coming from both San Antonio as well as Austin, Texas, right? And why? Biggest reason is because cost of living is cheaper in New Braunfels versus San Antonio and Austin. Job growth in San Antonio, 2%, still solid, 2%. New Braunfels, 6%. So it's not like there's a bunch of retirees moving to New Braunfels, or folks that's just going to come and take advantage of what I keep on hearing, the beautiful outdoors in New Braunfels. But they're coming and they're putting in the work. Before we talk about the average cap rate, because there's a reasoning there, but let's go into the asking rent. You see the difference in the asking rents, right? Almost $1,900 a month in New Braunfels, closer to $1,500 a month. Excuse me,
Okay.
$1,900 in San Antonio, $1,500 a month in New Braunfels. Now, you would think that because of San Antonio, higher purchase prices and everything else like that, that they would have a lower cap rate.
I was gonna ask you that.
New Brunswick. Well, the reason why is, and again, we were talking about this at the top of the hour, all this supply of new units coming into these bigger cities, like a San Antonio, like an Austin, like a Dallas, like a Tampa. And so what that's done, not only has that put downward pressure on rents in those cities, Matt, it's also put downward pressure on the property prices in those cities. And so that's why the average cap rate in those cities are right now trending higher versus the cap rates in the secondary cities. What do I expect going into 2025? I expect that to flip, right? Because I expect transactions going to start picking up as we go into the slow interest rate environment. Transactions pick up, property prices start to go ahead and pick up as we go again into the slower interest rate environment. And with that, we're going to see the average cap rate for properties in primary markets start to go down. Does that make sense?
Yeah. No, I get it. So you're saying that new construction in San Antonio and just in the overdevelopment and this is like this is what happens in big cities. They do this,
That's
they
right.
do that.
That's
They
right.
do this,
Exactly.
they do that.
That's
So
right.
you're saying that cap rate bump right now in San Antonio is a sign of the roller coaster ups and down bumps in that. But it looks like population and not like the numbers are actually favoring New Braunfels with regards to population increases, job growth. That stuff is actually pointing the right way in New Braunfels longer term. So likely you have a better chance of rents bumping well above 1522 Yeah. Okay. All
Yeah.
right.
Good. So
Got
I
it.
like that ramp. I love that ramp that we see in New Braunfels, right? I'm getting into a city kind
Hmm.
of early here that's on its own upswing, right? And it's
Hmm.
nicely, equidistant, if you will, between San Antonio and Austin. So,
Okay.
so yeah, nicely sandwiched and a lot to benefit from.
Very good. Okay.
Yes.
Okay. Yeah. Very good. Let's take that. Can I take that down?
Yeah, absolutely.
Good. Cool. So, Hervé, I think that listen, there's people out there who say, no, 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 you know what, I'm going to invest in Charlotte and that, and keep doing that. Again, your investment equation, guys, has to match with your goals. But what's worked for us with our target of good long-term appreciation, long-term IRR growth, and good cash flow early into the game, it works in secondary and tertiary markets. So, Hervé, that you've developed some tools for people to consider, like people like, okay, I kind of want to drink from that DeRosa philosophy, so to speak, drink the DeRosa Kool-Aid and maybe not invest in the top tier markets, maybe invest in the market two towns over from the top tier market, so to speak.
Exactly.
That's going to be enjoying the bump that top tier market has provided without paying the price that top tier market costs, right?
Great way to
Um,
great way to put it.
Tell us a bit about it, and I'll screen share this myself here, but tell us a bit about this Market Hunter Compass that you've assembled for our audience here as a gift, free gift, guys, that Hervé came up with to give you guys today. So, Hervé, tell us a little bit about as I get into sharing this thing. Tell us a little bit about what you've got in store for him here.
Yeah, no, I'm more than happy to. Listen, Matt, you know what? This list here was really spurned, by me getting a lot of questions from investors, from students all the time. Hey, Hervé, where do you think I should invest? What markets are you liking right now? What's kind of hot, what's growing, and so on and so forth, right? And there's so many ways to go ahead and answer that question, depending on where the person is living, depending on what their business strategy is, and things like that, and appreciation, cash flow, and so on and so forth, number of units that they want to buy. So what I decided to do was, again, knowing that, as you know, we like to favor the secondary markets and tertiary markets, that I went ahead and made a list of a lot of the major metros across the country. But then from there, I opened it up and I listed about 4 to 5 cities under each of those major metros that could be an attractive place to invest. Now, I'm not going ahead and validating that every secondary and tertiary city on this list is a great place to invest. But if you happen to be living in one of those major metros, and I've gotten in so many, Hervé, I live in Dallas, man, everything is so expensive over here, and it's a big buck coming down here and everything else like that. I'm like, okay. So what I did is that I'll show you Dallas, and then I'll show you some of those secondary and tertiary cities around the loop of Dallas, right? Perhaps 30, 40 minutes away, kind of a thing. Where the population size, so I put the name of the city as well as the population of that size next to that city's name, all under that major metro. And again, I did it for a lot of the major metros. I did it by region, southern region, northern region, east, west, and everything else like that. So now you could take a look at some of these cities like, hey, listen, I don't need to invest in Dallas. I don't need to invest in Tampa. I don't need to invest in Phoenix, right? I can invest in Murfreesboro, Tennessee versus investing in Nashville, Tennessee,
Yeah.
kind of a thing, right? And same thing,
Yeah.
Braunfels, Texas versus San Antonio, Texas, and things like that. So these are, I think it's a real handy dandy list. I'd argue certainly continue to do your homework once you get your hands on this list. And oh, by the way, I'll throw in another plug. You can do your homework and start to do your homework if you go ahead and download our free market analysis tool, which shows you the list of resources around the web where you can start doing your research, you can start doing your digging of all the aspects of these secondary and tertiary cities. Where do you find the population and the population growth of a particular city, as well as job growth, the industries that make up the particular economy that drive it? Where do I find this information? So I'd recommend don't only use one of those tools, use both of those tools in conjunction with each other to first identify that secondary city that you like to invest. And then the second tool, using the resources to really identify if that secondary city is an attractive place to invest.
So to say it back, guys, what Hervé's done is he's picked some of the top cities in the US, be that Phoenix, San Diego, Atlanta, whatever you got, right? Nashville. Those are cool kid cities. But cool, as y'all know from going in high school, man, the cool kids aren't the ones that get the good paying jobs, right? The cool kid's the one that ends up pumping your gas. Okay. You need to go invest in markets where the smart kids go, not the cool kids, right? And
Right.
so the smart kids are going to be investing where the best rates of returns are going to be and where the overall growth is, right? So, yes, maybe not Nashville, but if you think Nashville is a market you'd like to be close to, what Hervé's done is put together what the top markets around Nashville may be, secondary markets, right? Secondary cities that are perhaps within a stone's throw or with inside of a day's drive of Nashville that are going to get the economic spillover from Nashville, but are not going to be priced at Nashville price points. Okay. That's the Market Hunter Compass. And you guys can get that by going to derosagroup.com/compass, derosagroup.com/compass. Go and download that for free because we care about you guys. We want to see you guys hit your investing goals. So go now, derosagroup.com/compass and grab a copy of that. And Hervé had said as well, it's the most downloaded, hundreds and hundreds of people have downloaded this tool and have told us how beneficial it is. That is Hervé's Market Hunter tool. And you can get that by going to Market Tool at derosagroup.com/market tool, derosagroup.com/market tool. And that's there to just help you score a market. And it could be you could use the Market Hunter Compass to pick a market and validate that you chose the right one using the Market Hunter tool. And it'll help you get to know what factors are there. What is job growth? How diversified is that market with regards to economic diversity? These are great things to tell your investors, maybe even to show your investors you've done your homework and those kinds of things, right? Yeah. Yeah. Hervé, so then that ties me in to the last item here that I want to throw out. Number one, that always appreciate talking with you. And so do our students. And for those that want to get more inside that brain of yours that comes up with these wacky ideas of, hey, you know what we need? We need a secondary market tool. We need to make a list of all the secondary markets across the United States. Or, well, you know what I'll do? I'll go and put a list of all the brokers that are there that are heavy in apartment building real estate, and I'll put that list together for our students. That is a student only list. We also have it for sale on our website, which you guys could get. But Hervé has assembled a lot of these things because he's really trying to put forth value. And if you guys really want to really glean the value that DeRosa Group has, consider joining our accelerator, right? derosagroup.com/accelerator. It's very affordable. It's a couple $100 a month to be a part of the program at the baseline entry point. And you get to go to my office hours, which are today, 3:00. You could join now and today at 3:00, be chatting with me and with me and Hervé. With me at 3:00. Hervé's, yours are tonight, I think.
Tonight at 7 p.m. Eastern. That's right.
Yeah. Guys, we have daily access to DeRosa team members. And if you upgrade your membership just a little bit, you can get one-on-one coaching with me, yours truly, one-on-one with Hervé, or one-on-one with the Justin Fraser, the guy that keeps me and Hervé straight. These are guardrails of our company, keeps us pointed in the right direction and all that.
That's right.
Yeah. So that's Accelerator. And Hervé, last thing to mention here, one more free thing to give away, guys. Hervé, in a couple weeks, you doing a workshop because you really got some cool stuff to put out there, right?
Yeah.
You and I are doing it. You and I are doing a workshop. What are we going to be talking about?
This is currently in developmental phase since it is about 2 to almost 3 weeks away. But I'll tell you right now what it's going to be. It's going to be another tale of the tape. It's going to be a tale of the tape. It's going to be a workshop discussing investing in the Sunbelt versus investing in the Midwest.
Oh, Hervé, no. I think we're talking about because Sunbelt is automatically better than the Midwest. Sunbelt is the best real estate investing region that's ever been invented because you've got Austin and you got Atlanta, and you're not going to beat those markets in Charlotte. So bye-bye. No reason to even compare to the Midwest, right, Hervé? Why are we even doing this?
I'll tell you right now, Midwest, look out. Look out, Midwest.
Okay.
They've been punching their way to the top of the ticket, Matt. They've been punching their way. They're on their way. They're making a name for themselves. Look out. Yeah. They come from around the corner and they make it real. There's a lot of compelling reasons to take a look at opportunities, to take a look at secondary markets in the Midwest, right? I mean, again, it's kind of like going someplace where other folks have not been. doing something a little bit different, going to that area where there is not as much competition versus another area, whatnot, trying to be ahead of the game, think ahead of the game. And there are opportunities in these Midwest markets that are going to allow you, if you so choose, to go ahead and be a little bit ahead of the game, right? Punch your way to the top of the ticket, so to speak. So it's gonna be a real nice presentation. We're gonna lay it out. We're gonna show you guys a lot of information, a lot of data dump. We're not knocking one market or another. Matt or I, we're not going to select for you to invest in one market or another. Each markets, they certainly give and provide, right, some real compelling reasons to go ahead and invest. We're going to allow you guys to be the judges, right, on deciding which markets are more attractive to invest, those in the Sunbelt versus those in the Midwest.
And as Hervé knows, I like throwing stink bombs at him as often as I can. So I am aware. And we are invested in the Midwest as DeRosa. We're invested in both these markets, the Sun Belt and in the Midwest. And so we're very knowledgeable on it. And Hervé, I think, is going to be putting together a great conversation for us on really it expands onto how you guys should evaluate markets, but also there is conversation that maybe it'll help you guys generate which markets you really want to focus on for 2025 and beyond. We're also going to be pulling on a few students, a few prospects here that are on the market that want to join us live, that want to talk to Matt and Hervé about things that are going on in their real estate investing business. And hopefully Hervé and I can give them some well-founded, well-thought-out advice about what's going on, whether we think they should go left or go right, whatever that may be. And that's so register for that webinar right now, guys, because there's going to be, like Hervé said, free advice. There's going to be some great direction on, Sunbelt or Midwest. And also you'll hear a lot of our mindset and philosophy. And we're going to be doing free giveaways. I think a digital copy of an ebook that I wrote on how to do your first apartment building deal, maybe some other free giveaways in the works as well. This is not a webinar that's just going to get recorded, you register for, and you watch whenever you feel like it. This is a workshop, guys. This is, you roll your sleeves up, you bring a notepad, and you get there live, because this is not something you can watch the recording on. You have to be there live on the program. This is an interactive back and forth conversation with Matt and Hervé like you've never experienced before. The October workshop, register right now by going to derosagroup.com/October workshop. And we will see you guys there.
Absolutely.